It's Tuesday, November 1st, 2022. A few things to talk about today. As most of you know, tomorrow the Fed will come out and raise interest rates. I believe it will be 75 basis points. Comment down below. Let me know what you think it's going to be. Some people think it might be 50. Some people think it might be 100 basis points. I think that it'll be 75 basis points. And more importantly, it's really what the Fed is going to say, what Jerome Powell comes out and says tomorrow. Will he be dovish? Will he be hawkish? You really got to read the words in between. And it'll be very interesting tomorrow to see what Jerome Powell says. Now, a couple articles I want to share with all of you. The first one coming from CNBC. The Fed is expected to raise interest rates by 0.75 of a point and then signal it could slow the pace. Markets also brace for the Fed to end rate hikes in March of 2023 at a level of 5%. Now, my question is, how is the Fed going to get back to 2% if they just believe that they could just stop raising rates in March and somehow some kind of magic is going to take place? And so I don't know how anybody thinks the Fed can just stop in March and pivot. They could do that because of the severe strain on the economy, but by doing so, you're going to go right back to what caused inflation by all the money printing, by low interest rates, and expanding the Fed balance sheet. This is all going to cause even more inflation. The Fed has talked so tough now. They could slow it down. They could lower the rate hikes to 25 basis points, 50 basis points. I just don't see a pivot coming anytime soon. If the Fed comes out tomorrow and sounds even a little hawkish, if they talk about how they're going to have to crush inflation, if they start sounding a little aggressive, it's going to be very, very bad for the markets. So it'll be interesting tomorrow. And a lot of people will say, who cares, so what? This will affect everybody. The cost to buy a house, a car, to service that credit card debt, to service the federal debt, it's all going up even more beginning tomorrow because we are going to get another rate hike. December, we will get another. I estimate December to be at least 50 basis points. Here's some more interesting news that I think is going to play a role here with these rate hikes. This also from CNBC. Job openings surge in September despite Fed efforts to cool labor market. Right now, there are 10.72 million job openings in the U.S. These rate hikes have had an opposite effect on the employment numbers. And the Fed doesn't want to see all these job openings. They want to see this loosen up. This economy is too tight and they want to see it loosen, and it's not working. So I believe the Fed can only do one thing. Right now, we're being told that the economy is improving, that we have all these job openings, the consumer is strong. There's a lot of money sitting in the bank with the consumer, even though we know that's not true. But that's a lot of the news that we're getting, even though we know that the savings rate is 3.3%, that most people are working service sector jobs, they're working part-time, inflation's killing them. But they're going to use data like this, and this data may be true, it may not, but if we do have nearly 11 million job openings, this gives a green light to the Fed to continue raising interest rates. It's telling the Fed that, hey, the economy's not that bad, there's opportunity, there's jobs, people can make money, so keep raising rates. Here's another one, this is from Fox Business. 63% of Americans support federal government sending inflation relief checks. Now, when you read this, you know that the economy has collapsed. When you have 63% of Americans supporting government handouts, government subsidies, half this country right now would not even be eating if it wasn't for all the government subsidies. I did a video talking about when I went to Winco, one of the biggest discount grocery stores in California, if not the biggest, and the cashier told me that 75% of the people that shop at that store are using some kind of government subsidy, EBT, WIC, whatever. Yesterday, when I was at one of the dollar stores, they told me it's at least 50%. And so you start thinking about this, that if the government wasn't giving people money right now, 42 million people on food stamps, how would these people be eating? And this, in my opinion, is creating even more debt. I don't want to see anybody starve, but people, if we continue to pay for all this, for millions, tens of millions of people to eat, we're creating more debt, and it's putting such a strain on the working class that is paying for this. But the question is, why do so many people, please answer this down below, why do so many people, if the economy is doing so well, why do so many people need government subsidy to go to the grocery store, to go to a dollar store? Now, yes, I understand. There are people who are lazy. There are people that just feed off the system and milk the system. But I also understand that there are people out there working and trying and not making it because the dollar just doesn't stretch as far as it once did. So there are multiple things broken right now, and I don't know if it can ever be fixed. Speaking of dollar stores, very interesting article here today on Fox Business. Dollar General price audit finds double-figure error rates up to 88%. Now, Dollar General has had a history of incidences where they were charging people more than the advertised price on the shelf. Several stores in Southwest Ohio failed. This is Dollar General. Several stores in Southwest Ohio failed a recent auditor inspection. Too many products had different checkout prices than what was advertised on the store shelves. And some of the errors, just a few really quick. Nestle coffee was advertised on the shelf at $2. When you went to check it out, to pay for it, it was $4.35. Hefty Solo cups advertised for $4.25 on the shelf. You go and check out, it's $5.95. Purdue chicken strips, $7.95. You go and check out, it's $10.75. That's a big difference. So one other thing I'd like to add to this is there was a sign on the shelf that all sales are final, that you could not change the price at the register. All sales final. So I bring this article up, I think it's very, very important because so many people are shopping at these dollar stores now, and me included, went to one yesterday. But so many people shopping at the dollar stores, the bargain stores, looking for discounts, looking for a deal, looking for a sale, because they are doing everything they can to fight inflation, to stretch the dollar. And be cautious, be careful, because stores like this are ripping people off. There are going to be people and businesses that are going to thrive in this economy because they're going to rip people off because they know people are looking for a deal. They're looking for a bargain. In doing so, if you're not paying attention, you could be ripped off. So make sure you look at that receipt and make sure you know what you're paying for. So make sure, again, let me emphasize, pay attention. Don't be a victim of this con game, because you're going to see things, we see the gray watch market, all the fake Rolexes, you see the fake silver coins, fake gold coins, fake prices at Dollar General. We're going to see more of this. All those cars that were in Florida, Hurricane Ian, all those storm damaged, flood damaged cars, well, they're going to come on the market and people are going to try to make a lot of money duping people who are looking for a deal, looking for a sale, a bargain, and they're going to get ripped off because they're going to buy one of these damaged cars. So you really have to be cautious now, because you have very unsavory people coming out here trying to sell you stuff and rip you off. So be very, very careful. Here's one from The Hedge. There really is no middle class any longer. Middle class at this point is suffering from fatigue, recession. It's going to get much, much worse. Credit card debt surged by $46 million in the second quarter of this year. And, when we think about the middle class, you have to think for a minute, what is the middle class? I think that a lot of people are living so beyond their means. And some people believe that the middle class is, buying a 3,000 square foot starter home, leasing 2 Mercedes. That's middle class. And I don't think that really is middle class. I think people are living way beyond their means, and they are going broke to try and stay in this middle class that really isn't middle class. You know, back in the day, middle class was a 1,000 square foot house, a 1,200 square foot house, one car, and that was it. And we have people that are trying to be middle class, but they're trying to be so far beyond the middle class. You have to be careful right now. So many people going broke, trying to be this middle class. I don't think middle class is a 3,000 square foot house and 2 Mercedes. I could be wrong. Let me know your thoughts, comment down below. But one thing we do know is the cheap money and all this exotic financing with RVs, automobiles, housing, it's allowed people to live way beyond middle class, who should have been middle class, but they're living way beyond middle class. And it's all coming to an end now. And these people are going to be in very, very big trouble here. And, you know, the tide is about to go out, and we're going to find out who's real and who's not, who's fronting, who's flexing, and who is not. Now, if you pay off your debts or you have manageable debt, you have a emergency reserve savings account or an emergency reserve of cash. If you have some assets, you have your debts paid down, you have a nice income, and you haven't been living over your head, you're going to be okay. In fact, you're probably going to do very, very well when things do crash, because you're going to take advantage of huge opportunities and huge discounts, and you're going to build wealth. The time to build wealth is, like they say, when there's blood in the streets, when everybody is selling and getting out. This is now the time when the real money is going to come into these markets and buy the real dip, and they're going to make real money. So keep your powder dry, be very, very cautious, and be patient. Be patient. I think a lot of people get so impatient that they want to, you know, this FOMO, the fear of missing out, the quick flips, the NFTs, the cryptos, all this quick money. You have to build, in my opinion, wealth steadily, and you must exercise patience. There's so much risk out there, especially right now, so much speculation. This is the time right now to sit back on the sidelines and let it play out. And I think most of you will know when the time is right to, you know, come into the real estate market, when the right time will be to buy a car, or to buy that, you know, 10-acre parcel of land, or to buy that farm, etc. You'll know. You'll know. This to me is not the time. The blood is not in the streets yet, ladies and gentlemen, but we are heading in that direction. I think within 12 months, we are going to see a catastrophic collapse in housing and in the stock market. Here's another one. Diesel disaster. Truckers working for peanuts amid surging fuel prices. This makes it extremely difficult for independent, the owner-operators in trucking. And they say that they're working for peanuts. And out here, I mean, you're looking in California, average diesel price is nearly $6 per gallon. Think about loading up a semi and what that must cost these people. I mean, if you run two 200-gallon fuel tanks, that's 400 gallons at $6. That's $2,400 to fill up a truck. And that just means that everything being put on those trucks, that's going to the retailers, that's going to the grocery store, it's all going to go up. Prices of everything going up. So I think we're going to see this November, I think we're going to see the CPI higher than it was in October. That's just my opinion. With fuel costs going up like they have over the last few weeks, and it's all being added on to anything being put on a truck, anything being put on a train, a plane, a ship, it's all getting more expensive. The hedge, spiking rates and plummeting affordability have priced low-income homeowners out of the market. Well, like they say, you'll own nothing and you will be happy. I really seriously believe that this collapse that we're getting very, very close to, that there is going to be huge opportunity, but I don't think we're going to see this type of opportunity probably for 100 years. So if you have money, if you're looking for real estate, property, land, discounts in autos, RVs, boats, this is going to be the time. Probably within the next 12 months, maybe 18 months, maybe 6 months. Let's just say 6 to 18 months. We're going to see sales and discounts unlike we have ever seen in our lifetime. My opinion, not financial advice, just me thinking out loud with all of you today. That's my opinion. But I think that we're not going to see it for a lifetime, and you're either going to, make it or you're going to miss the boat. And so this is why I say right now you've got to have, you got to be putting a cash reserve away. You got to get the debts paid down. You got to get a mental mindset. You got to have a plan. If you're looking at property, this is the time to start looking in the areas that you want to invest in or that you want to move to. It's what I'm doing right now. This is the time to do your due diligence, do your homework right now. So when the sales do hit, make sure if you're dealing with a real estate agent, make sure that you have a real estate agent lined up or a team lined up in those areas that you're going to be looking at, because when the deals hit, it's going to hit fast. These houses are going to come on, and you're going to have to act very, very quickly. So you're going to have your money ready. You're going to have the people, your team ready, your real estate agents, your lenders, whoever. Make sure that you're doing your due diligence right now, that you're building the right connections in the areas that you plan on buying in, whether that's investment property or a personal property that you're going to move to. The hedge, Toronto Stock Exchange, back online after hour-long outage. This was interesting. Eric Nuttrail, senior portfolio manager at 9 Point Partners. He said, I feel like I'm trading in a third world exchange. I have multiple orders for $20 million to $40 million that I cannot execute. So they're saying that this is just another technical issue. Is it? I don't know. But this is another problem that I think we're going to have to deal with at some point in our lives. And it's going to be cyber attacks. It's going to be grids down. It's going to be outages. And this can send you and I and America into the third world within minutes. Think if the market's shut down, you cannot access, you cannot buy, you cannot sell, you cannot get your money out. Again, I cannot repeat this enough. You must have money and assets that you can access in a time of emergency. What if you were locked out? Okay, maybe you're locked out for an hour today. What if next week it's 8 hours? What if next time it's 3 days? Next time it's a week, 30 days. So much damage. The technology out there now is really, really scary. And to think that we're not going to see this in the future is being very, very naive. And I will close with this last one from the hedge. Why you should be bullish on silver. Silver. I own a lot of silver. The last 2 years, I've been buying gold. Years before that, I bought a lot of silver. And in this article, Doug Casey says he's more bullish about silver than any other industrial metal on planet Earth. At the same time, silver is also a monetary metal. It's going to continue, he says, to get support by savers and speculators, which will further support its price. If you're bullish on gold, he says you should be even more bullish on this stuff, silver. I have a link down below, SD Bullion. If you have any interest, if you need to acquire precious metals from a very trusted, reputable company, SD Bullion, link down below. I've been using them for 4 years now. I don't care if you buy it, you don't buy it. It's up to you, whoever you want to use. If you don't want to use anybody, you can go to the pawn shop, the coin shop, a jewelry store, your favorite coin dealer, whoever it might be. But I do believe, as we are heading into some very, very difficult, uncertain times, you need something that has been around for over 5,000 years, gold and silver. And these premiums continue to go up. We are going to see more separation between paper and physical. And if you need to get to your physical, put it where you can get to it quickly in a very, very safe place of storage. Multiple places if you can. But what I like about it is it's very, very liquid. You can store it in multiple locations. Nobody knows where it is. Nobody knows how much you have. You can pass this on to your kids. It has purchasing power in any country on planet Earth. Anywhere you go on planet Earth, people know what silver is. They know what gold is. So it's extremely important. So if you have some, I think you should get more. If you don't have any, I think you should get some. Again, you can get it from wherever you want. But we did talk about earlier about people selling fake gold, fake silver, fake watches, destroyed cars, fake art. We're going to see more of this. So deal with a reputable company, a reputable coin dealer. But again, that's up to you. That's your choice. But SD Bullion, link down below if you need a reputable place. That's who I've been dealing with for 4 years. So I'm going to wrap it up right there. Tomorrow will be very, very interesting. And tomorrow will affect everybody. What Jerome Powell does tomorrow is going to affect the entire globe, including you and I. So it'll be interesting. I'm going with 75 basis points. Let me know your thoughts, where you think it'll be. And by doing so, I do believe by the end of this year, we will see the 30-year fixed mortgage rate at 8+%. Next year, I do believe it will be double digits. So get ready for that. What does that mean? It means housing prices are going to come tumbling down. And if you have cash, if you have good credit, if you can put a solid down payment down, you're going to get a very, very nice deal on real estate. Have a wonderful day. I look forward to speaking with all of you very, very soon. Please give this video a thumbs up. Make sure that you share it and make sure you subscribe. God bless.